Great. So thank you very much, James and Matthew and Andrew and the full APS team. We're very happy to be here. We've been part of many of the APS events over in Europe, and this is a great opportunity to take a great event here to the United States. It's also a homecoming for me, having lived here for a number of years, so it's great to be back and enjoying the opportunity to present to this group here. I'm going to talk a little bit and sort of kick the presentation off, the day off, with some of the macro trends that we see as a data provider in the app stores, and give some of the perspective about how we see really successful companies shifting towards a longer term mobile mentality and growing their apps successfully over a longer period of time. What we do, we are what's commonly referred to as an App Store intelligence provider. We're tracking download and revenue information, ratings, review data, and ASO across the stores. If you're familiar with some other companies in this space, you're unhappy maybe with some of the pricing or attitudes that come with this type of service, we would really like to talk to you. Please come and find us after the presentation. We're the guys that didn't get it together to bring the roll-ups this time. We had some logistical issues, but hopefully you can recognize the faces, and we'd be really happy to talk to you. What we do is we collect the data. It's about 100 billion data objects every week from the app stores. We also partner with over 20,000 apps that are responsible for more than 150 million downloads a month, who are sharing information to us that allows us to provide very accurate estimate data for the performance of a wide sample of apps in the app stores. And things that we can answer with our data: how did Snapchat perform leading up to their IPO, for example? What do iPhone users download the most in Germany or across any of the 55 markets that we cover? And a timely example here: how many downloads did the search term March Madness actually drive in the last month in the US App Store, and which apps are actually commanding the most downloads from that search term? We're short on time, so I won't go into detail around the agenda. We'll just go right through it live. And a quick word about the data, which you can look through afterwards because the presentation will be online. We're covering Apple App Store and Google Play today. We're excluding China so that we can have a good head-to-head comparison between the two stores. And all the revenue data that we present is net of the Apple and Google Store taxes. So macro trends in the duopoly. What have we seen? How is the marketplace for apps actually changing? We've broken this out between apps, which is this page, and games, which is the next page. And generally, the high-level story is that revenue is growing year over year faster than apps are. And we see that across both iOS, which is on the left, and Google Play, which is on the right. Double-digit growth for revenue, store revenue, across both platforms. When we look at games, the picture is a little bit different. So games are obviously early champions in the app stores. We've seen on the iOS side, a slowing of that growth, only 3% year over year, with revenue eking that out a little bit by 4.5% year over year. The Google Play statistics are a little bit different. We see an uptick in downloads here as well. This is mostly consumers in more developing markets, emerging markets, shifting to higher power devices that are able to play these games and downloading these games. And the revenue is not quite keeping pace because in a lot of these markets, the revenue is actually handled direct through the carrier billing, telecom billing. So you're not seeing that necessarily come through the stores directly. It's interesting if we look now at individual categories where most of that growth is occurring, and we are seeing that actually, and consistent with the last slides, apps, non-games, are growing more quickly than games. And what we're showing here is, on this axis, the percentage growth year over year in revenue. In this axis, we're showing the total size of the categories in revenue. And the size of the circle here is the absolute dollar amount of growth. And all Apple gaming categories grew by $200 million year over year, according to our data. And the entertainment category in iOS, which is here, grew $200 million. So the growth in entertainment matched the growth across all gaming categories in 2016. And we see that more consumers are finding great ways to actually spend money within the apps. The developers have gotten better at actually monetizing, and consumers are finding it, let's say, more attractive or becoming more comfortable spending money on purchases within the apps. Another trend which is consistent with what we've seen in the past is in the app stores, growth and markets really accrue to the very top. So we took the fastest growing markets from the previous slide, entertainment and lifestyle, and we essentially see that the top performers in each of these categories took between 30 and 40% of the entire market during that year, and that the top 5 are at about 50% of the total market. So yes, the headline figures are great. It's really accruing to the top performers in that market. It's a highly concentrated market, and companies that are not with those established brands are finding it more difficult to tap into this growth in apps. And when we talk about finding apps and what consumers are looking for, we want to look at some search terms. And we did a study of the top performing search terms in the US App Store in March, and only 12 of the top 100 terms are generic or non-branded terms. So terms that did not specifically quote the name of the app. And we can actually see that here. On the left, we see the generic terms. On the right, we see the branded terms. These numerical figures are taken directly from Apple. And we see on the generic side, basically 2 categories, either very generic terms like games or weather or music, and then some topical names here, March Madness, NCAA. Interestingly, none of the generic terms on the left here make it into the top 10 overall. As you'll see on the right, the scores for the top 12 in this case are all higher than the scores for the generic names. And we also found it interesting that you have names like Uber, Tinder, Spotify, who are ranking above Google in terms of search popularity, which is an interesting stat. So what's the problem with this, or what does this lead us to kind of question about who's benefiting and profiting from apps today? We looked back a couple weeks ago, week of March 19th to 25th, and nearly 4,300 companies published an app in the App Store during that week. And of those, only 189, 4%, were able to achieve more than 1,000 downloads during that period. So there's an extremely low hit rate or conversion rate for apps in terms of the success that they can find post-launch. And if you think about all of the time and resources and budget which goes into building an app, this is a really low rate of success. And if we actually look on the revenue side as well, of course not all apps are monetizing through the store, but it's still interesting to see the number is only 19. So we continue to see a mismatch between the amount of time and investment and effort which is put into developing apps and then the performance of those apps once they're launched in the stores. So why is this happening? Well, we wanted to talk a little bit about the mobile mentality, and since we're in New York, we used a very well-known figure here, and I think we can summarize it by saying that the mobile mentality as we've seen it has been very short-term and opportunistic, a la the traders. And we asked ourselves, why? Well, let's follow the money. Let's follow where the different players in the app ecosystem are actually earning money and where the narrative is coming from in mobile. So the store owners and the media obviously are all communicating this very, very strong standout growth in the markets. And it's obviously in the interest of Apple and Google to continue to show that a lot of people are making money in the stores, that the top line growth figures continue to increase, et cetera, et cetera. And in order to keep that kind of cycle and that interest going, we hear these new trends that come out a couple times a year: search ads, instant apps, subscriptions, messenger bots. This kind of keeps the cycle of media hype ongoing. But if we look back at the impact of some of these trends in the past years, they really have not delivered a fundamental shift in the status quo. The other thing that we see is that developers have a lot of challenges and a lot of questions, but finding an ad network is not necessarily one. If you put an app into the store, it is very likely that you're going to get emailed from dozens, if not hundreds, of networks. So we want to talk now about shifting towards a longer-term mobile mentality on the basis of what we've seen some of our very successful customers being able to do in terms of growing their apps over the long term. A.T. Kearney put out a study. They have a great consulting word here, which is called trilinguals. It basically means people who are well-versed with data, technology, and business. And what they did is they surveyed a number of digital companies, and they categorized 4 different groups of companies based on how well they interact with analytics. And they have the laggard category here, which is only using analytics for tracking historical performance. The followers category, which is understanding how analytics is driving cost and revenues. And then explorers who are looking for prediction, and leaders who are really thinking strategically long-term about analytics and data. And over 60%, 65% of the people that they identified are in these laggards and followers category. We also think if we look at the mobile space, it's probably even a higher percentage there, because people have been focused on tracking internal data and tracking the attribution and measurement around the performance of ROI for their ad campaigns. But not many people are looking forward in terms of really forecasting how well their business can do using data. And this kind of leads to a paradox in mobile. So the very established companies, the big brands, the offline or digital but non-mobile first companies that can afford analytics and strategy departments, they generally don't have the mobile specific expertise. But you also have, conversely, the emerging companies, the mobile first companies, who have grown up as mobile natives, but they either don't recognize or they can't afford or think they can't afford access to the data and the strategic decision-making tools that can help them grow over the long term. So we'll just look at a couple of examples of both sides. This is the Caixa Bank. It's a Spanish bank. So they have 27 iOS apps, and they have separate apps for importing checks and paying bills. We could find dozens of examples like this where companies have split all of the functions of their core service into individual apps that by and large will never be found by consumers. It's a friction-filled process that a consumer actually has to use these different services, and it's not leading to a successful strategy for this company. Volkswagen is another example. They have 75 iOS apps in this account alone. Volkswagen sells millions and millions of cars every month. Their average download per app is less than 1,000, and their third best performing app, which is actually a game, hasn't been updated since 2013. So this is an example of a company with resources and clearly a focus on analytics and strategy in other areas of their business that hasn't yet been able to adopt that in mobile. And a counterexample, so this would be one of the emerging companies, is Next Keyboard. They published a good post-mortem study about how their app went from $20,000 a day in revenue to $2 million. This is the famous shark fin profile, which we see time and time again. Companies will launch an app, they'll spend 70% of their budget pre-app launch or right at the time of launch with no budget maintained for marketing over a longer term. And you really can't sustain a position in the top charts organically just on that basis, and these companies don't find success over the long term. So not all apps fail, and we're just going to finish with a couple of comments on what successful apps actually do and what characterizes those that succeed. So we looked at some of our most successful clients and partners. We saw 4 commonalities. First, most of them have failed before in some capacity, whether it's a product, an app launch, a hire. they've felt the pain, let's say, of not meeting their expectations in mobile apps, and transitioning to point two, they either don't want to or can't afford to fail again. And through this, they've developed an above average appreciation of data and an increased willingness to invest into data and analytics with talent and tools to power a long-term view of their apps. And they're laser focused on things that they can control. So we saw the number of apps that come into a marketplace on a given week. That is not in the control of most people. You are not necessarily going to be able to control your entry position, the timing of your launch, and what your competition is doing in the app stores. So the first thing that they do is they really focus on an organizational commitment to a long-term mobile mentality. They hire the right talent. They bring in the right tools and partners for different stages of their business. So this includes UA partners at the appropriate stage. It includes data partners at the appropriate stage. It includes press and media partners at the right stage. And they really transform their business and they enable these people to use the data to plan out a long-term strategy. And they execute that long-term strategy on both a paid and an organic basis, informed by data over the long term. So we just took an example of Wish, which is a shopping app, and one of the most important things that these long-term companies do is they quantify and identify their opportunity. So how are similar apps and games performing? You can get an understanding for the overall scale of a different player or the overall scale of a specific market niche by using tools like this. You can identify which countries are large and which are growing. So we can see that in this example, the US and France are the top markets in terms of size, but that the German market is growing fastest month over month in this case. Apps that take a data-driven approach to ASO rank for 2 to 4 times more keywords than apps that don't, and the statistics show that 65 to 70% of consumers are finding apps via the App Store search. This is not coincidence. This is a strategic focus by these companies on ASO to support paid acquisition efforts with an organic marketing strategy around ASO. And they set realistic benchmarks on the basis of this data to inform their strategy. So we took this example of Wish, we followed it through. For the shopping category on iOS in Germany, it's about 3 million monthly downloads. 46 apps in that segment get more than 10,000 downloads a month. To rank in the top 20, you need about 1,000 downloads a day to stay in that range of visibility. And the average cost of acquiring a user is $2.37 according to Chartboost. So if you take a very baseline estimate and you say that the required investment to maintain a top 20 position, assuming you acquire 50% of your users, is going to put your budget ongoing at about $1,200 US a day. So most companies that would think of a market launch here would not have that $1,200 in the top of their minds, and they wouldn't be able to meet their expectations with the success of their app, with the launch of their app. And this is the type of information that we think the longer term, more successful companies are going to be using to inform their strategies over time. So to conclude, companies that succeed in 2017 and beyond will be aware that a lot of the narrative and discourse in the industry is driven by organizations that do want you to invest in paid user acquisitions. And this is an important piece of the puzzle, but it can't be the exclusive piece. And to counterbalance this trend, you should really empower your organization with the knowledge and talent and tools to adopt a long-term mobile strategy that finds a better balance between organic and paid. That's it. Thank you very much. I hope everyone has a great day. Thank you.